This is Samir here again from the Digital Fifth. This one specific one, the knowledge session or webinar or whatever you call, is primarily focused on acquisitions which have happened in the market in last 1 year. And we'll also do a bit of a thought process on what all is happening. So a bit of a trend you see in the market. And of course, in comparison to the last year numbers, this year numbers are very high, right? We have got 30 acquisitions, or actually 31. If you were to include Bharat Pay and Centrum's acquisition of PMC, very large, and a lot of amount of money got transitioned. So when we talk about it, we'll also consider that why it is happening, what kind of trends do you see in the market, what kind of companies are coming in, right? So I think we will go across the entire framework and discuss around that. And of course, it's not that we know everything. It's something which happens in the market. We're also reacting to it. We're also learning. We are also not sort of saying that everything is right or wrong. There are things happen, but at least we can sense it. And I think last year also, when we get some inputs as part of our annual report, we had spoken about it. So this particular report and what we're doing is part of our annual reporting. And we did a fundamental analysis last week. Before that, we had released a report on payments. If you're looking at that, you can reach out as well. And all of them are obviously available on our website. On 9th of next month, or next week actually, we will launch our full report as well, which is almost like 100 pages. And a lot of work is going on to get you good glimpse, good ideas about what's happening. But any which way, let's go ahead with the discussion point. And if there is any question you have, please do send back on the chat, and we'll pick it up. This is all very, very specific to what we have learned, understood in last few weeks. Anyway, so quick one, we are basically the largest players in this segment, which is fintech consulting. We work with banks, fintechs, and everybody else in the market, including bureaus and networks as well. In fact, many times we are consultants to the consultant as well. They pick up our thoughts or our ideas. It's very complicated, and we work with very large players in the market as well who are into tech side, and they may not be may have the focus on the consulting side, and we do that. And of course, sometimes people tell us that we are like a rainmaker or sometimes like an accelerator, but we don't take any kind of equity in the business. These are the four businesses we are in. We do tons of work on consulting, and maybe from a business perspective, this has seen a steep rise in the last 2 years as larger businesses, larger banks also have started working with us as they saw the movement was, the ties was exactly in that direction. And of course, we work with umpteen number of entities in different segments. If you want to build a digital strategy, if you want to build a digital journey, or you want to do a peer comparison in your business, we sort of have done everything around that. And our frameworks and processes are well built for scale as well. For fintechs, obviously, we help them in go-to-market, building strategy. So from an early stage, building the strategy to execution, we do everything. And of course, with other segments as well, some of them are actually trying to build the lending books with us. So we help them in get connected with lenders as well. So after building the ideas and generation, we can connect to banks, lenders, PGs, anything else in the market as well. We do tons of partnerships. So it's a I mean, maybe a unique model where anybody coming to market, let's within India or outside India, lands with us, and we help them in setting up the business in India. Not the legal side of it, but everything around that, process part, strategy, and then go to market with us. We do trainings. I think this content is also built also for our training courses as well, which we are starting from end of this month or early next month, where we will have almost 4 months of course running on fintech, open banking, financial blockchain. So that's something which you can look at that. So it's built for that content, and this is very deep, and we are the largest trainers. We train in a lot of corporates as well. And of course, we have launched a new product called Hiring, which is focused on hiring purely on fintech. Very deep, because we have access to the market when we bring that on board. These are some of the customers we have worked across: banks, fintechs, even PSUs. We have worked with. We work with networks. We work with a lot of software companies, NBFCs as well. So that's largely the TG which we work with. And of course, our customers are worldwide, and of course, our reach is increasing with time as well. I think while we spoke about it, and one of the reasons why we need to be conscious about what is happening is because Indian fintech ecosystem has grown a lot in last few years, right? So The point is, if somebody was to look at acquisition in 2012, 13, 14, 15, I think there was the buyers didn't have money, right? Buyers need to have raised 100 billion before they start acquiring. That was not available in the market, right? So there was very little which happened in early stage, very little. The buyers don't have money. There are no unicorns. Nobody has extra cash. And of course, those companies which were not doing so well, they just failed, right? They just closed shop and go. And we will do actually analysis of all the companies which have closed down. So what is happening today is, if any company is not doing well, they may have an opportunity, have a good 30-50% opportunity to exiting by selling, or even if they are doing well, they can get a good valuation at exit. But I think 3 to 4 years back, it was not possible because buyers were not rich. And we'll look at why buyers were not rich, because it was VC funding which was chasing, and we are RD stage. So this is just an ecosystem to say how the ecosystem has grown. And we see that more or less towards 15, 16, 17, 18, we saw growth. And some of those players which were right here, right? Let's say if you look at players like a Paytm or Pine Labs, which have been there for a very long amount of time, are the ones who are actually trying to acquire a lot of entity as well. Let's, for example, Perfuse acquired an entity because it has been there, it has been able to establish itself. Razorpay has been there for a good 7-8 years. It's a big acquirer in the market, and we have seen more and more coming up. Those who are the guys who are actually getting richer and bigger. I mean, technically, we can almost now make out anybody who's in Series C and D beyond and has a gap in the market. We'll try to address it through acquisition, and we'll see that. I was saying about why the movement is going to be higher now is look at the fuel. Fuel is money. You can't acquire because most fintechs are not profitable enough to use their accrual for funding, right? For acquiring companies. Technically, if you look at the whole period, which is last 4 years, from 17 onwards, and of course, before that also, there's not too much of money on the table. We have seen suddenly the money is coming in, right? So money came in only actually in the real way. It's as, in a sense, you say slowly and then suddenly. So this year, last year funding was almost 5 times. This 5 times money is also built for and has ended up creating 14 unicorns in the fintech segment additionally. Before this, only 7 were there. Now all that money is going to get pumped in and getting into the market with acquisition. So you will see, we'll talk about that. Also look at the investment which has happened. Look at the Series C investment or the C and D investment. This is around $75-80 million. Now this is to scale up. This is about entering into another market outside India. And it was also for acquisition. This money is for these purposes only, right? Which is to say, can you scale faster? Can you kill competition? And this is going to be viral right now. Many of them who are now a unicorn are going to become a decacorn as well, right? So how would they will go and scale? They can't build those new journeys and processes immediately. And they will actually go and hit in the market and start buying the companies, right? There's no other choice they have but to do that. So you just look at the amount. Almost 80% of the money is in Series C and D, which was not the case earlier, right? It was still loaded last year, but it was not as much, right? Because the company was still small. There was no bonds. The money was coming slowly and slowly. But now this is the moment, and there's so much money available. Of course, typically you see a Series and D and beyond company buying out. You wouldn't see a Series B or Series A company buying out. If they do, it's a small time acqui-hire, 8-10 member team, not so doing so well, and they get acquired. But beyond that, very unlikely. But now this is, you will see suddenly a large company buys another large company because the money and the frameworks are there. And of course, at times that may be because of the investors may be common, and as investors will be prodding them to merge as well. If you look at the payment side, we have seen almost 10 times growth in the amount of funding. Now, this much of increase in funding, technically payment companies are not going to make much more inroads in building more payments. At least it's not profitable. They will acquire maybe any smaller companies or in sideways, or they will actually get into lending business. And we'll see in the analysis as we go forward. Even lending companies will acquire, you see the segments, right? So you will see sudden movement, but payments will be one of the largest to acquire. And we also believe that open banking, the money is actually flowing to very few companies. It's not going to the entire diverse market. It's going to few companies as well. So you will see a typical acquirer in the market. So on the payment side, you will see a Cred being a big acquirer, or a Pineless being a big acquirer. In open banking, you will see Bank Open a big acquirer. M2P as a platform will be a big acquirer. So you will see almost the same names doing multiple acquisitions over a period of time. And of course, wealth guys have certainly, you have seen few wealth guys becoming larger. You see that 8 times to 10, 9 times growth in funding there. That's going to sort of prod a lot of it. This slide is actually talks about almost 31 acquisitions which happened in the market. And interesting concept, we saw foreign entities buying into India, which was not the case earlier. We've never seen a foreign entity getting into the market and buying. Yeah, Matthew, can you just see the... Matthew, you managed? Okay, yeah. So you see a Cred acquiring multiple companies because it has built a business model which is about customer engagement really well, right? It rewards an engagement model. Now, that was obviously not a profitable model. Now, to scale up, they've gone into buying, say, a lending platform which is Perpay. It has gone into a corporate expense management platform like Happy. And it has also gone into prepaid platform, which prepaid license, which is HIBAR. And then obviously they will issue cards and all of that, which looks logical on a hindsight now. But that's where it will go, and maybe they'll do more acquisitions. I mean, big one was PayU buying BillDesk, a very large transaction. Razorpay again buying Terra, which is purely on the lending perspective, pure lending side, and we'll do a deep analysis of that. Pine Labs again buying a foreign company. This is again a new transaction. We have not seen Indian companies buying outside. So Wave was another new one. And of course, Bank Open is going wider. They're actually acquiring a P2P, so they are in the MSME lending, Neobanking business, and they're acquiring a business in the retail side. Now, I know I get passionate, and a lot of people say that they are not able to follow. So maybe a few questions I can define, detail more, but maybe few question if you can send on chat, it will be good as well. And if you have some question you want to come on board and ask, that is also fine. So maybe quick questions now, and I'll keep explaining and say what I see in the market as well. Neo acquiring a wealth tech is again, there's a Neobank and trying to get into new business on the wealth side. You see the same pattern on the Jupiter side. They've again acquired Easy Plan, which is again a wealth business. Khata Book, interestingly, was only on Khata side, right? But they've gone into business analyst, which is actually accounting related platform. So they obviously are going from a front end to back end and enriching their offering. They're also becoming a neobank sort of entity. And of course, Wirecard buyout by Neom was primarily maybe a fire sale because of the issue they faced in Germany as well, right? Because of those issues they faced. M2P, I think post funding has risen really well, and they've acquired a company primarily which is on the credit card experience side as well as on the collection side. So since they are building platform which they started with a prepaid, then they have gone into credit card. Yeah, as I understand, they are actually doing an entire switch, and they're also right now getting into collection as well as on credit card experience side. They are basically trying to create that for any business you want, come to me. I'm the platform for choice for the market. So they are acquiring more, and I do believe that for scaling, they will continue to acquire more companies. Rista's acquisition by DotPay is obviously slightly different. DotPay is in between a commerce and a POS business, and they have acquired a restaurant platform because they want to get into that business as well. Similarly, Raise entering into Moneylicious, or Avail bought out or acquired Yellow Bank. Yellow Bank was someone who's launched with a lot of focus, but did not scale enough on time because the winners were already decided by then. We've seen already maybe a Neo, or maybe if you look at Jupiter, all of them scaling already. So maybe not enough money on the table. Next round of funding would have been difficult. And Avail has gone ahead and done same transaction maybe 2 years back would not have happened because the acquirer may not have the money to get into it. Settlement buying a IO Physics, which is again an analytics business platform, which is again great, right? So there's a dearth of good analytics platform. And sadly, many of the analytics platforms or engagement platforms or chatbots have gone away because they did not find enough empathizers in the market. I think we should see this as a good positive movement, and maybe we should see more of analytics companies bought out by the larger entities. Newcred's acquisition of PayServer was two small companies trying to build something new, working together and building it up. Rooftalk and Gold, almost overlapping business on gold loan side. They got they got into it. Fisdom wanted to get into tax. They were acquired. CashRich is acquisition is again very similar. Two wealth tech companies getting into each other. Wishful with again the lending company get into wealth, and Dwara again. It's not really neobanking. Transact now is not really neobanking, but something very close to the way you partner and work with maybe a dealer structure kind of thing, right? So that's it. And of course, the biggest entity was obviously Centrum with Bharat Pay acquiring PMC, and then Unity Bank, small finance bank license coming to them because of crisis. And this segment, this business will still continue to grow much more. Many more guys will actually try to acquire banks. So at the end of the day, all fintechs are trying to become banks, and all banks are trying to become fintechs, and nobody has a choice but to keep running towards each other, right? So when fintech started their journey, they always said that we do one business better, and we don't want to get into across all. So lenders will do lending, payments will do payments, and all of that. After that GAN was over, everybody wants to do everything. So we are heading towards a neo banking framework where after some time, everybody will start looking very similar, look like a bank, but of course, sharply focused on a segment with a lot of client engagement layer, which is where I think the banks and NBFCs are losing out. They're not engaging with their customers on digital channels, which is a missing piece. Anyway, so this is a quick analysis on this side, and happy to take any questions if anybody has. If you want to ask it, you can ask right away as well, and I'll try to respond back. Yeah. Any questions?
Hi, sir. This is Aditya from Cashly.
Yeah, Aditya.
Yeah, sir. Will the now rolling out CBDCs will open up new markets? Will there be new rolling out central bank digital currencies by RBI? Will it open new markets and new opportunities?
No, I think so. I'll talk about two parts, right? The first part is it would obviously open up, so there's no denial about that. But how many years it will take? Maybe around for anybody to build an ecosystem around that will take maybe 3 years. Important that we invest it upfront. So if you've not done it, get into it. We ourselves will be launching CBD focused courses as well. So that makes sense, right? But the point is, what happens is that Web 3.0 and all of that will start jumping. Everybody will start making noises, but not enough is done to understand the frameworks and see the dependencies. I mean, it's like the same thing. Account aggregator exists but doesn't exist, right? It has not been scaled. Token exists but doesn't exist. So we need to be able to figure out as an ecosystem, how do we promote and support it? And then we all engage closely with RBI and the government and make it happen. So opportunities will come, but you can take it as maybe at least 24 to 36 months of lag. Usse pehle kuch nahi hoga. I mean, they will launch at least in next 12 to 18 months. Usse pehle kuch nahi hoga. And by the time it reaches to people and the benefits are accrued and known, I think it's a quite some time away. Any other question from anyone? If no, then we proceed, and I'll take you through whatever the other thought process pointers which we have. Now, if you look, this is basically a slide to just say who are the acquirers in each segment on the wealth side, on a neobanking side, or let's say tax side. Who are the typical acquirers? Who's trying to acquire what kind of companies? Like on the wealth tech, the acquisition has been done by some of the neobanks, some of the lending companies, and some on the wealth side. Similarly, if you look at payments, you see international companies, and you see another payment company and payments company, and so it's a mix, right? So I think the slide was to share who are the key acquirers in which segment. It's just to simplify that as well, right? Tax credit companies suddenly became hot with two of them getting bought. On the lending side, everybody's getting aggressive on lending, so you see more action here. But yeah, good news is it's more diverse. Earlier, all action was on payment. and bit on lending. Today we see much wider, and I'm so really happy to see how neobanking and wealth tech are really growing and looking at scaling up. So I think these are the pointers of what trends we see, and we'll see maybe a bit of a tsunami of some of these points again. I think let's say Stripe buying a Reco, which is a reconciliation platform in India, was a big one, because we've not seen foreign entities, and that also of the quality and size of Stripe, looking at India for products, right? So I think India has become more of a product platform business as well. And worldwide, it is coming to know. In fact, we were trying to figure out what name we should have for our report this time. Earlier, the report name was actually, last year's report name was India's becoming the fintech hub of the world. I think this will be, we'll come back with much more aggressive number pointer, because India is the hub now. If you look at US, UK and India, I think these are the three leading lights worldwide, which are growing really differently and creating impact as well, right? So India has people, growth, technology, everything, and of course user base, which is also digitally savvy. So it's going to be big one. So products are coming from India as well, and that also which are used to scale, rather than producing something which can't really handle pressure. And also from a Indian startup perspective, while Pine Labs acquisition of Fay was just a starting point, I do believe that in this year we will see more such transactions, because people have money. They actually can enter other segments, and as long as they can find local players which are really sort of skilled and good value for money, they will acquire. That should happen in Middle East, Southeast Asia, or even can happen in US, given the money which is flowing in. I think neobanks are definitely trying to widen their offerings. So they started, I mean, so it's a very awkward one. After 5 years or 3 years, everybody will look like a bank. Some started on payment side. Let's say Razor Pay, they started into neobanking. They're getting into lending. They're trying to figure out how HR platform can be offered, accounting can be offered. So they are widening. Open started as an open banking platform from a MSME perspective. On their own, they have launched their open banking platform, which is not the customer channel, but actually the underlying API structure, which is competitor to people like Setu or people like M2P. They have launched it. It's called Switch. And then they are partnering on or acquiring OptoTax. And they were not in the retail neobanking business, which is what they have done by acquiring Finin. So bank open with so much of funding in, and I think they raised 100 million plus. They're getting into wider areas and deeper areas. So one side, they are able to add the gap on the retail side. And on the other side, they are trying to ensure that beyond the banking APIs, they can actually acquire more services. And they've gone into tax as well. Neo again got into wealth side. One more area saying that, okay, can I be on the wealth side as well, rather than just being on one side, which is neobanking, which is only savings account and others. Khata book, again, trying to get into same business, Jupiter. So I think we see neobanks, which started only as a savings or a current account platforms, will widen their services, because that's where they will be able to make money. Otherwise, there's too much of dependency of open neobanks for revenue from the banks, and given the problems and controls there, they may not be able to make much money in the long term. So that's a thought. Look at the other side, which is say Razorpay acquiring a Terra. Terra obviously was initially part of. I'm forgetting my friend Pradeep Ratnam runs it. OA Fintech. So OA Fintech, so I think was similar. I mean, Terra and OA Fintech were, I think, similar or same companies, or they got acquired somewhere like that. But Terra obviously is a good platform for MSME lending, and that Razorpay acquired so that they could add that framework as well, as they went into neobanking and they started lending to their customer base because they had very deep data on payments. BharatPay obviously is getting into a loyalty framework as well because of so much of cash flush. They've gone into it, and of course, credit is adding many more segments to it. Cards, expense card framework, and then of course lending. All of that they're acquiring. So well-funded startups will keep widening their offerings because they have a choice now to do that. Smaller ones will not do because of sheer capital. We also see horizontal stuff, right? PayU has been in payments. They found very overlapping frameworks with BillDesk, and BillDesk was independent, maybe trying to has larger partnerships. So they got acquired as well. And M2P we spoke earlier, where horizontal. So they were already into platform, and they've gone to acquire two more platforms. So as to they can get into deeper offerings on credit card side as well as on collection side. So horizontal integrations will increase as capital, and the gaps are very visible because customers also, and we are right now working with many of our clients. They want to start on day one with prepaid and credit card both, right? Choice in आपके पास. If you are offering only prepaid, you might just lose out. So people are looking at more width from their fintech vendors. They are no longer earlier looking at them as यार innovation कर देते हैं, छोटा मोटा innovation कर देते हैं. I think that time is already gone. People are looking at really deep partnerships and willing to take punt with them as long as the partners also have a wider offering rather than the old world. एक product करेंगे तो चलेगा. Not really, not anymore. This is just a quick view on, credit business. Obviously, credit is a credit card bill payment. It's a I would say rewards platform, engagement platform, and I still use it. I don't take rewards anymore, largely no, but I definitely use it for my credit card payments because this is the only platform which I think is better than what my bank offers. My bank really offers me a bad experience on buying, right? But in which way, so I'm not getting deeper into it. But they've also gone to rent payment or credit card. It's a lot of frameworks, and they're of course getting into payment aggregator license as well. But if you look at their buying, they are using this, leveraging this structure to buy HapPay and Cred. Again, a HIBAR is a PPL license. So basically, they have bought a PPL license so that they can actually get into that business. And of course, and this is HapPay's acquisition was also very large acquisition, right? Fairly large acquisition they got into. I think you look at Razorpay, again, a very large acquirer, and we've added maybe the deals they would have done earlier as well. They do invoicing, they do instant settlement, PG, tokenization, every segment. So on payment, they're end-to-end there. And they're, of course, now issuing commercial cards, and they're also getting into neobanking end-to-end. Maybe someday I'll also onboard them as well. But good stuff. And of course, they acquired Offwin, which is more of an HR platform. An HR platform, why they're acquiring is because their corporates may need it, and that allows them to offer their services to the employees of the company as well, right? So employees of the companies may need card, may need lending, so they're getting much deeper data, and they're trying to work with them. Again, fair makes sense because you have to not service only the client, but employees of the clients and the partners and the vendors of the clients and everybody in the market, supply chain framework, right? And of course, they bought Terra for building the platform for lending for MSMEs. And of course, they bought sometime back ThirdWatch, which enables them to get into the e-commerce side, which is to ensure that the fraud management is taken care of. ThirdWatch was more of a fraud management platform, AI based, and that's what they procured or bought sometime back. That's why I think the deal is few years old. It's not a recent one, but we just wanted to talk about some big time acquirers in the market as well. And of course, we do believe that Pine Labs will be one of the biggest one. Again, on Razorpay is on the online side. Now, Pine Labs is on the offline side. A giant has, if you go to a shop or a mall, you can always see their devices everywhere. So they're doing a fab job. So just one sec, maybe one of the question which I just saw on this is that which are the other trends do you see? I mean, just hold on, guys. I'll talk about those trends as we go forward. I'll definitely update you on what we see in the market as well, and would love to see your feedback. What do you see? What do you see? Because this is nothing that we only know. It's not like our IP. Everybody can actually guess, and we do try to sort of make out. But before we proceed, any more questions? And I think Maitri, if you can share the feedback, because we are coming back with our trends session next week on 9th at 3 p.m. We will have fintech trends for 2022 and beyond is coming up. So you can file for that, give your request for that or something else as well. And of course, anybody who fills the form, we will share the deck directly to them overnight. So we'll share the deck back to you today or tomorrow. Anybody who fills the form. we'll get it. So any questions as of now, any pointers, any thoughts? Because nobody knows the truth. Yeah, go ahead, anybody. I'm waiting. Or it's a boring session, I guess.
No, sir, one more question.
Yeah, go ahead.
Since I mean, what my little experience I have, everybody gets onboarded to one or the other nature player here. I mean, either somebody is relying on or has dependency on for some trade, lending product, or somebody has a dependency on a payment product with others. Is it fair to say that at the end of the day, there are only 5 or 6 major players who are going to manage the market in long run?
Look, long run is like this. In a digital business, there are not too many survivors. In a digital business, you will not see 100 players playing the game. And therefore, the cost of customer acquisition, the guy who's engaging with the customer directly or has most number of partners, is likely to be a winner, right? So I think my end state, after maybe many years, each segment will have maybe just few players. The way you have on Policy Bazaar being the leader on this side, you will see more and more such like that, because the cost of operations, the entire engagement here, all of that will change dramatically. You will also see that broad level pay, there will not be enough competitors, new competitors coming on the broader level, but there will be segmental leaders who will come, who will pitch in with a better product. One of the things which happens with leaders, and it will happen to these fintech leaders as well, that after some time they become slow. So a lot of people say, and they also become sometimes arrogant as well, right? It's not that they say that banks are slow. I've seen large fintechs being many times extremely slow and extremely rude and difficult to work with, right? So it's not that it will be a law of natural attrition as well. So you will see version 2, version 3 coming in, and there'll be many guys who will go down the train. Just look at it. Yesterday or today, I was looking at. Um, uh, so we had this crash on Facebook, right? 20% crash. So even Facebook is under pressure, right? So you will see a new generation coming every now and then. Every 3 to 5 years, you should see a new generation of platforms coming in. Today, somebody is running on physical POS. Now, ePOS will come, or a soft POS will come. You're trying to build a framework around UPI. Maybe UPI equivalent will come from, let's say, somebody else. The Nash can be replaced by something else. So you'll see a churn all the time. But very few people will actually stay as leaders, and some of them who are outside top 5, top 6 will just get closed and bought over, because it might just not make sense.
But then, in your view, we will still have segment leaders only at the end of the day, for somebody in payment, somebody in lending, or somebody in cards.
I don't think so. What will happen is that it will aggregate towards so look, lending on its own without engagement layer is very close to waste of time. If you don't know what the customer is doing, you don't have an idea of his behavior, you can't control anything, you can't do much. So lending on its own, like a term loan, and you are trying to engage, will not work. You need to have a card level framework, or you need to have somebody you may be running his payment business, or you are running his accounting business. You need to know what the customer is doing now before, so that you can engage with him continuously, and then he remembers you, right? You have his traits, you can reduce your risk. So lending on its own for a long time, and I'm talking about digital lending on a front end side, if you don't have an idea about what the customer is doing now, it will be very difficult. So you will see people which are more universal by nature, which handle payment and lending and other things together, because customer will over a period of time gravitate towards lesser apps. Today he can still be okay, ye bhi kar lete, wo bhi kar lete, but with time there will be attrition. So I think you will see people who are doing multiple things, but there'll be still experts or big giants in some of these segments. I mean, can there be a giant on purely payments? Answer is yes. Giant purely on lending without a customer engagement layer, where the customer does transaction day in, day out, very unlikely. And of course, it's not no real answers. We can sit together and do that attrition, but if someone
Yeah,
is sitting on one area and saying I will become giant there, unlikely, because somebody will come and in the same space, right? For example, somebody is a giant in pure POS business. Now, the POS business is not going to grow beyond a point, right? So there is risk coming. There's a risk of embedded finance coming, right? You may have a great front end, but here comes a large platform which is a super app, which embeds every payment system with you, and you can't really compete because customer is using their app more than you. Amazon Pay is a big threat to everyone because they're doing a fab job of it, right? Their engagement layers are very good. So it depends on that. But small time players in a new segments have to scale fast. Otherwise, they will not make money.
yeah. So in short, what I understand, payments and lending goes together.
Correct.
Whatever comes with it is extra bonus.
Correct. And payments and lending together may just turn out to be a neobank as well, right? Because underlying,
Of course,
you want to
of course.
store the money with you. Today, you may do it with by issuing a gift card, and also that you can retain the money with you. Tomorrow, the bank's license will become easier with the way Niti Aayog has come back, and I do believe that there's a space for, and we have not issued a new bank license for a quite number of years, right? Put 5, 6 years. So I think maturity levels has come where maybe 5 to 10 licenses may come, and these licenses will come to these fintechs, and many of these fintechs will actually end up acquiring banks as well, right? Because if you, I mean, I'll talk about those trends as we go forward. But do give a feedback, and I think we see a Nilesh, go ahead with the question. Maybe you have to please quickly put your video on and introduce yourself, and then so that I have context from where you're coming.
Good afternoon, sir. Thank you for very interesting session. I'm student at IIM Udaipur, and this was very informative session for me. My question is, like RBI is planning to roll out CBDC itself, and at the same time, they are imposing taxes on crypto. So can we my question on the similar lines, that can we expect RBI issuing independent licenses for neobank anytime soon? And at the same time, like how will the existence of CBDC will affect the entire scenario? Because it will effectively going to change the role of the banks in entire network itself.
So I think this similar question came earlier also. I think the problem is that we read entertainment, right? We are reading only for entertainment purposes, right? So CBDC, Web 3.0 and Meta, everybody starts speaking about it. And 90% of those who speak have no clue what they're talking about, right? So I think it will take its own sweet time. Right now, if you were to build your career, focus on where we are. I am not saying you should not invest in future, but right now it's I think I was reading, somebody was saying that Meta is like figment of imagination right now, right? Somebody is taking our mind there because it will come on 5 years, right? It would. But I think where we exist today, there is enough opportunities for us to look at, and we work in that direction, and also obviously focus on other things. So I think problem क्या है, college में आप वही पढ़ रहे होंगे जो entertainment है, right? It's like filmy magazine है वो. Everybody writes on the first page क्या होने वाला है, and everybody becomes like during election during this period when the budget comes, everybody becomes economist, right? So because just want to add more followers to themselves on LinkedIn or Facebook, right? I think read better, it will help. बहुत crash as market में. So step back. By the time you come out of your college, CBDC will still be in the progress, right? So you need to find space outside. There's enough in the market which to work with. Innovation बहुत है.
Yes, sir. Thank you very much.
Yeah. Okay. So I think you guys keep giving feedback back to us, and Maitri, please share the link as well so that they can do it. Yeah. So let's continue. I'll go further, and yeah. So obviously, we do believe that in the market, Pine Labs is back in news for another acquisition they're planning to do, and they're going to. If you look at their business, they're into lending, credit line, pay later, every kind of product they're getting in, right? So they're not leaving any. And of course, if they do get into backends much further, they are also getting into. They bought Quicksilver quite some time back, which is a prepaid and gift platform, and then of course they bought international firm called Fave, which is again for cashbacks and discount coupons and all. Very interesting stuff, and I do believe that Pine Labs will be one of the biggest acquirers in the market. Now, Now that we have reached here and we've analyzed what has happened, I think we'll talk about a bit about what's going to happen now. The first thing first, we see that many of these large entities which have gone and raised a lot of money and CDC plus funding, you see 75% plus. I think they will be on the prowl. You can almost make out who will be on the prowl and what they will kind of companies they'll buy. Either they buy, get into other countries and they will start acquiring there, or they will get into India and acquire. So I think if the 31 was the number of deals which happened last year, I think we should see a good 50% hike on that across board. So heavily funded companies will keep, and of course you see the trend. Their funding has happened only in last 1 year, right? So they're still judging and figuring out here or kahan pe invest kare. So it's still work in progress, right? In terms of Indian companies acquiring outside, we just spoke about. I think when you have funds, it is going to happen. They will go into international market. I think Middle East and Southeast Asia is the first level because pricing is also commensurate. It's not very high to acquire in these countries because the valuations are not that steep. I was actually evaluating some company a couple of days back for a Singapore-based company, and they gave the valuation was some X. And I'm looking at equivalent company in India would have come for at least 4 to 5x because I think that's what is happening in the market because of the size, right? So just be aware of that. We will also see large neobanks will keep acquiring more and more companies, right? So Welltech, lending, smaller neobanks, they will keep acquiring. And of course, they are also waiting right there to acquire a bank as well. So that may just be around the corner. If some bank is on the table for sale, that might just happen as well. And open banking companies will not let the market stay, right? So they will not. So there are a lot of, as of now, I see at least 10 to 12 guys building up a open banking platform as of now with their API stack. But larger ones are trying to tend to sort of garner more and more market and may not give them space unless they are really unique and scale up as well. So you would see many of them getting acquired instead of growing as well, because the market will not, the bigger ones are not giving the market space, and they're so funded that they are literally reducing the price like anything, right? In terms of valuation crossing the bank, so if you look at as of now, there are 10 banks whose valuation, and I'm talking about 10 private banks whose valuation is sub $1 billion. And we have right now 21 unicorns in the market on the fintech side. So you can see the disparity. Either they will get a proper license or they will tend to acquire, or maybe they can even acquire a cooperative bank the way PMC has happened, because cooperative banks also can become a small finance bank now. So there can be a tie-up between a fintech and a cooperative bank, and they can put a structure to it. Of course, it will have to go through the legal and all of that, but I do see that's going to happen. The other thing is because we recently saw the regulation coming from the government or RBI, or maybe a working paper which says that NBFC service will not really work, right? So NBFC has a rent framework which has come up in last few years may not be viable anymore. It may be called illegal. With that case becoming, I do believe that many of these fintechs or neobanks and all of that will acquire an NBFC license as well, and that will be crucial for their scale, right? So I think that's likely to happen. Many of these fintechs will actually acquire NBFCs. They can be a neobank, that can be a NBA payment company, or it can be a neobank or a payments company or lending company. Each fintech will try to acquire NBFCs so that they can actually ensure that they can be licensed and do that activity as well. And of course, analytics companies will get acquired. I suddenly see in the market everybody talking about analytics more and more with so much of data being there. Most banks or most fintechs will find it very difficult to build their teams. And with analytics companies are not acquiring scale or valuation, they will be up for sale, and that's likely to happen. Anyway, so I think we do teach this kind of framework or these new ideas as part of our course. This is a course which is coming up. We'll share this document as well, so you can look at this. So this is basically a almost 4 months course, and I see some of the participants of our course right now in the session as well. Their course is actually ending in next week. And it's an interactive session. We have where we really go deep. We have best of the speakers coming up, best of the entrepreneurs coming up, best of the investors coming up, bankers coming up to take these sessions. And of course, we go through case studies, we go through capstone projects, very tough capstone projects, where almost capstone project if you can do, you would be at least 50% through with your own use case as well. You can build your own company with those understanding. And many of the founders also in our course as well. And you obviously build a huge network. So this time we are almost, I think we have 18 to 20 seats left. We are almost through with our numbers, and would love to see if you would like to join that. So that's a pointer to you if you would like to join the course. With this, I stop now and take more questions as we go forward. Happy to take any kind of question. And if you give your feedback, we'll share the deck back with you over the email or WhatsApp, whatever Matthew will plan. So if you do give your feedback, we'll respond back. With this, I stop now. Any more questions? I just saw a few questions. Question has come from Tushar. Tushar, you want to ask this question directly to me instead of going through this difficult route?
Yeah. Hi, Samir. Hope I'm audible.
Yeah, you're audible. Maybe I can't. Can I see you? I can't. Yeah, I can see
I have already activated my video, but
yeah, I can see you. I can see you.
okay.
Yeah, and maybe you can give a quick introduction of your background before we start.
Okay, so I am part of the innovation cell at Aditya Birla group. And the question, and before this, I've been working, had experience in payments lending with DMI as well as ICICI Bank.
Excellent.
So the question I had to you, Samir, is that you mentioned about a growing disparity in the valuation. All the private banks typically are still sub 1 billion, while the fintechs are in multiples right now, the big ones. So how do you see the banking industry or the financial product manufacturers responding to this kind of a challenge? Because the view would be probably while the product is their product remains at the back end, the valuation that they probably have generated till now is not commensurate to the kind of steep valuations which the fintechs have seen. So what are your thoughts? How do you see the banking or the traditional industry responding to this?
I think so. Few pointers. Some are doing really well, and they are adopting digital in a proper way. Some of them are maybe I would say putting the wrong foot forward. The challenge, and I'm being very honest about my views here, and I'm not anti-bank or anti-NBFC. We work with both segments, and I'm a banker. I've been in the digital industry for almost good solid 15 years before, 18 years before I set up this firm, right? And I've been always in digital. So missing angle is very simple. We think that the digital or a journey or fintechs are only the layer for technology. Actually, it's complete nonsense. We think of it only a tech, and then you will within your bank or NBFC, you will start jumping on your technology team and start firing. Tumhare paas ye nahi hai, tumhare paas wo nahi hai. All of that will happen, right? But technically, what it needs is you need to have you should be able to build deep journeys, which is the product management team should be very strong. Do you have a very strong product management team? Do you have a great customer experience team, right? Most banks and most NBFCs will be engaging with a UI UX expert, which will be outside the company, will come only for a few days or maybe in a year. Maybe they will give them just some templates to work on. So that's nonsense, right? Again, you can hire ultra number of sales guys, but you will not hire because it's too complicated and kaun kharcha kare, waste of time, right? So those who spend 100 crores on the wrong stuff and 1 crore on UI UX, I think I'll pity them, right? So they don't focus on that. I'm not talking about every bank, right? Some of them are doing fab job, Access is doing fab job, and I've seen many of them actually focusing on the right areas as well. You don't look at when you look at technology, you don't realize that APIs are important or not. Look, समझने वाला ही नहीं है, is API product team activity or technology team activity? I've seen most of the time API platforms are given are credence or whatever is given to tech team saying बना के लेके आओ. और ये बेचोगे कैसे? How will you sell, right? Do you know how to do a digital marketing? Most banks are doing ads in TV or can do ads in paper, but they don't know how to engage with the customers directly. Their apps are not used for sales, right? They are only for services. So the point is there are gaps. On one side, they are winners on the branch side, right? Nobody can beat them on the branch side. Branch is still holding them really well. But as we go more towards digital and the customer is looking for digital, how would you rate a bank from a and I'm thinking any bank. So if they're good, obviously I rate them good. But how would you rate them against an experience which are available in the market, which are doable? But just a hierarchy does not allow. Compliance will not allow anything. The team on risk side will not allow. They have the app ready, but they will not allow new services to it because the risk will increase. I mean, fund transfer are happening, UPI is happening, everything is happening, but they will not allow. The investment done has to be disproportionate in technology. Today, in some banks, the ratio of technology versus the entire bank of the technology plus digital team will be 1:100. 1:100. 100 people will be on the other side, and then 1% people will be on digital and this. That also, if you start to spread, you will suddenly realize that for BAU, including for managing the PCs and all, will be 90% people. Only 0.01% is left. So I think there's a disparity which is causing issues. You see the valuation of a Bajaj Finance, right? That's an exceptional valuation because of the sheer case that it's also a largest fintech in the country as well, right? It behaves everything on the ultra digital side. So I think we need to look at nuances there. The winners are going, and the cost of operation, cost of doing business, how many resources are required, what is the tax. I think all of them is really not on the right side. So those who can pass through, they will have a disproportionate valuation. They should ideally start competing with the banks. Some of them will become backends, but we have to always realize backends will ultimately die. Because you can be on as a pure partner for some time or maybe some more time, but you can't ever exist as a backend system. Highly unlikely. You really can't have a customer without customer engagement. You will die, right? So you did well. The banks did well because they had branch level interaction with the customer. But in digital side, they don't know how to interact, right? So I see the valuation will be an issue. And of course, I'm not saying that fintech valuation is correct. Of course, it's built on the belief that they will do well and going forward. And some of them will do, some of them will not do. But bank side, I think they can do a fab job by relooking at their org structure. And this, when we do our digital strategy and many of these activities with our clients, I think one of the things which we do is we establish the digital maturity metrics of the customer. And we realize that it's not really about technology, it's about people, process, and everything around that. If you can manage, I mean, training, you're giving soft training, how do you handle customers? But in digital side, are we giving them right training? Which is why when we are doing these trainings, which we are doing for digital, I mean, everybody's picking up because they realize that gap hai pura, koi padhata hi nahi hai, right? Nobody tells them what it is. So I think I know I've gone on and on, but I'm not against banks at all. They can do a fab job of it, but most don't. And they try to treat technology team as a cost center, and most time misbehave with them, and they get into the room, right, saying, "Yeah, tech wala tu chup rahe," right? So that's not going away.
Thanks a lot. The leading question was, Samir, do you see more participation from the banking industry or the traditional players in the fintech funding as well going ahead? So do you see that piece also taking increasing?
I think if you look at right now, we work with the IFL. They have 100 crore fund, and they're deploying in fintechs, and we are sort of program managers for them as well. And we see that they're very positive. We're working with it and trying to invest more and more. You have seen SBI investing. You have seen HDFC investing. ICICI investing in the market, IDFC investing. So I think the investment by larger banks into fintechs will continue, and this will also help them because it's a long-term partnership. You need to also understand you can't set up your own fintech automatically on your own, and those who do really have not gone success, right? So I think it's a good way to invest in the market, and some of them are doing a fab job. I definitely see some of them like ICICI really promoting fintechs in the market and by investing early stage companies as well. And of course, IFL has been leading as well. So yeah, I think it should happen. And the only thing I see is a bit blocker is when the decision makers are digitally illiterate and they want to take decisions, they make wrong decisions. So I'll give you a very bad example. There are not enough qualified CTOs themselves in the banking industry. And then there are every business guy, every ops guy thinks that he's the CTO. He takes a business architecture call, technology architecture calls. And every bank, every NBFC has maybe 8-10 lending LOS system without knowing where their data is. It's a mess, right? So I think it's a time for CTOs to stand up and say, shut up, man, I'll tell you what to do. Let's work together. I think that time has come right now. Otherwise, everybody being a tech architect and then things go for toss, then they say, oh, CTO will, I think those time has to go. Business and technology have to work together very closely. And tech guys also can't say, I don't know business. I mean, if they don't know business, they should shut shop and go and figure out, work with some software company and sit in background and saying, oh, mujhe specs to main banaunga. I think those days are gone. CTOs can't run away from owning the business itself.
Thank you. Thanks a lot, Samir. Thank you.
Thank you. Thank you. There are a few more questions coming up. I think there's a guy who asked, how's the market for aggregation of BFSI? Would there be level playing field for lenders for aggregators? I don't think so, right? I don't think so. Aggregators will have very few aggregators will be able to lead the way. Others will not, right? So I don't think most of the guys who are just aggregating lending have realized there's very little business you can do. So most of them are pivoting into deep engagement with the customers, very, very deep engagement with the customer, which means that, or the lender, and building sophisticated products around that. I think Paisa Bazaar is doing very deep into it. Indify is going very deep. So most of them are not building the old world, saying lead generate karo or sell karo. I think that business is dead now. Aggregators in that sense are dead. Of course, Policy Bazaar is doing fabulous because they have taken a lion's share, but on the lending side and other side, I don't see there is any space for marketplace. You can't live with this lead processing cost. You need to do more. And that's what people are doing. I think with this, I have sort of done my quota of all the questions I can see. Anything else you guys have, you can ask, and then we can close, guys. I'm happy to take anything. If you need any inputs and all, I think you can always reach out and we'll be happy to work with you. If no, we stop now. Thank you guys for joining us. And we'll be back on 9th for our next session, which is actually trends in overall trends in fintech in the country. And it's a broadened agenda because we've worked across visions, we have worked across funding, but thematically what's going to happen on lending side, what's going to happen on payment side, we'll go deeper into it. And of course, it's more of a workshop, more of a challenge, question, discussions, which is what we'll do. With this, thank you. This is Samir here saying goodbye. See you.